All right. So again, thank you guys for joining tonight. We have been over just about everything. At this point, this is a webinar on something to add to your arsenal of trading tools. This is one of my favorite ones. So a little bit about Fibonacci. Just to show you what it is, I'm pretty sure some of you have seen it before, but it's basically this tool right here. Looks something like this. So what it essentially does is it's going to measure, first you're going to measure the swing high or swing lows that happen in the market on your chart. So like for instance, right here, from here to here, this will be a swing high, another swing high. So as you know, when we teach about entries, we teach for you guys to get in at break of structure, change of character, um, which of course, after those things happen, we get what's called a retracement. So the Fibonacci retracement tool is to help you anticipate the retracement level. So all these numbers you see to my right on the Fibonacci are basically percentages of the swing high or swing low. So what we tend to look for is for the retracement to happen past 50% of the move. So what do I mean by that? So if I come over to the chart and I take out my Fibonacci and I want to get in for a buy because this, is clearly going up, I would measure from the bottom. You're always going to measure from left to right. So if you're going from left to right in an uptrend, you're going to go from the bottom to the top. Okay, and then if you look over here, these are in decimals, so I'm going to change these percentages for the sake of the webinar today. Okay, so right here is the 50% level. So what we would anticipate is for price to come past the 50% level here in our retracement move. So why do we want our retracement to come past the 50%? So for us, and there are many things that traders use the Fibonacci tool for. So what we are going to teach is the way we use based off of smart money and ICT concept. So for us, we care about something called a premium and a discount. So let me go ahead and change this to just the 50% level here. Okay. So here at the bottom, this is called our discount. And this is where we would want to buy up. Now, why is it called a discount? Because when the price moves down in an uptrend, this is going to be the cheapest area you're going to buy at. And you want to buy at the lowest point you can possibly can. So this will be the discount. And then, of course, when you're selling something, you want to sell it for as high of a price you can. So if you ever went to like a garage sale or anything, they're gonna sell off their personal items for as much as they can get. That's the same concept here. So when you're gonna sell, you want to sell in a premium area. So this here is premium. And this here is the discount. So that's just the skeleton of what we're looking for. So does anybody need to screenshot this before I take this off? And does everybody understand, or is everybody with me so far on why this is the premium and why this is the discount area of the fib? And guys,
Yeah,
y'all, okay,
you
cool.
just
Y'all
you
can
just mark it on the swing low, right?
say that one more time.
You said when you're marking it on the swing low,
It depends
like
on the
the
direction.
retracement.
So yeah, if you're in a bullish run, you're gonna place it from the swing, from the bottom to the top for the swing high. Same thing if you're I'll just do this for example. If we were in a bearish run, you would want to place it on the last swing low. So we're just going to pretend that this is a downtrend, but this would be from the top to the bottom, from left to right. So you want to start from the top and swing it down to the bottom for your swing low. Did that make sense?
Copy.
Okay, gotcha. Alrighty, so since we're looking for buys, we only care about the discount. We don't care about the premium. If we're looking for sells, we would only care about selling off in the premium area. So I'm just going to take out the premium here. Now I'm going to bring back my regular fib. What's this? Oh, there we go. All right. So let's see. Let me find. This one didn't really retrace. Well, actually, let me bring this retracement up a little bit here. All right. So this current swing high here that happened earlier today. So you see here, price has dipped into the discount right here. So that would be our first goal. Did price come into the discount? If it didn't, I wouldn't care about looking for an entry yet. So now that price has dipped into the discount, now my second thing is the optimal entry area. So the optimal entry area, and you're gonna get they should already be posted in the resources channel in the Discord. I did post my Fibonacci settings there for you guys to, if you want to utilize the same levels. But the optimal entry area, which is like one of the best things of the Fibonacci for me, are these three levels here: the 0.79, the 0.705, and the 0.618. So typically when you are looking for price to come into the optimal entry area here, what you also would want to be looking for is the other characteristics that we talk about when we look for entry. So you would want the break of structure. Okay, so we got our break of structure. Okay, and then y'all know me, I always look for a fair value gap, which is smack dab in the middle of the OTE area. And then, of course, my order block, which I don't really need to mark it right now, but it sits, y'all know my order block sits right below my fair value gap. But what you're mainly looking for is either for one of these two items to sit on or within your OTE area. It's a major confluence. So that is the gist of how to use the fib in the OTE. It's very, very straightforward. But basically your steps is to look for your swing high or swing low. Okay, then we find our break of structure. Then you would plot your fib on the swing high or swing low, and then you would make sure that your fair value gap or your order block sits within the OTE area. Does that make sense to everybody? Yeah, sure.
Yes. Does time frame matter?
It happens on every time frame. You can utilize OTE on the 4 hour. If you're on the 4 hour and you're trying to find your major zone there, you can, for instance, say you see a huge fair value gap on the 4 hour, you can measure out the last swing high or swing low and see if that fair value gap sits in the OTE area. And then I'll do this on replay so you can see it play out here. Okay, so say we're watching the market, we see our break of structure, we want to get in for the buy, and we're like, okay, well, I'm gonna wait for it to retrace. I see him break a structure. Okay, what you can do, you can start measuring your swing high now if you want. I don't know if y'all have seen me do this during live trading, but I'll break out this Fibonacci tool all the time while the bull run is happening, and then I'll just keep measuring it until it stops. So you can do that as well if you're anticipating a retracement. So then we'll just go forward. Okay, now I see that price is moving down. So we're gonna keep this level right here. See if it starts to move down. Okay, now it's giving me bearish pressure. So now I'm gonna highlight the OTE area here. All right, and then I noticed that there's a
FVG goes by the doji.
say that one more time. I didn't catch it.
The FVG goes by the doji that was formed.
The FVG is wherever you see the space in the 3 candle series here. So this whole area,
Uh,
let me box it in. These 3 candles here.
yeah.
So these 3 candles, and I see there's a gap in between those, that this first candle and this third candle here. So I will place my fair value gap here, or imbalance, however y'all learned it. They're the same thing. Okay, and then I'm like extra satisfied because that is what I'm looking for. Now, just to preface that, sometimes price won't always dip all the way into your OTE. Sometimes it will kiss the OTE area or the 618 level and come up. Sometimes it'll come all the way down into your fair value gap and come up, or sometimes it'll come past and want to tap into the order block. This is just a tool. It's not a crystal ball. Well, depending on how many times you use it, it can be considered a crystal ball, but it's not guaranteed to always tap all the way into the area. So it's up to you as a trader to decide where you want to place your entry. For me, my rule of thumb is I'm looking for less than 20 pips of a stop loss. So what I would do is I'll bring out my entry tool, which in this scenario would be the long position tool. Then I would come down to this red 0.88. That's just my level for the first area of stop loss. That's my personal preference. So if I hover over the OTE area with my stop loss, if it's less than 20 pips, I'm happy. In this case, it's almost 10 pips, which is a very, very good stop loss. So I'm happy with entering right off the 618. So price might come into my stop loss and then come out. I'm okay with that. So that's why I always say it's good to always calculate your risk before you enter a trade, or know what you want to risk before you enter a trade. So that way, when you enter, you're not scared about how much drawdown you're going to go into, because you should already know, okay, I'm risking $50 in this trade. So if I get stopped out, I know it's only going to be $50. So, so then I would let this play out and bring this up to at least a 1 to 3 risk to reward. And then you just hit the play button. And then, of course, it bounced off the 618. So the market's closed now, so that's where it stops. But that's pretty much my mental map of how I utilize the Fibonacci. Did that make sense, Simone? Or want to make sure that
Yes, please.
okay. Everybody else good? Everybody else with me? Yay, nay?
Yeah.
Okay, cool. Thank you. All right, so that was a example of a buy. Let me see if I can find a sell. Oh, and these blue lines up here, I forgot to mention, these are my extension levels, which means they're how far I anticipate the move to continue up. So they're also what I consider my take profit levels as well. I'll usually come to the negative 618 first, because that'll give me my 1 to 3 based on where I place my stop loss. Now, also, if your retracement comes past the 1, that trade is no longer valid for me. Thank you, Sway. So yeah, just keep that in mind. It is very possible for price to retrace to the 0.88. It can do a very, very deep retracement and then swing back up or down. But if it comes to the 1, I'm pretty much okay. I'm out the trade. It looks like it's trying to reverse. So let's see if I can find a sale. Okay, so this one here. Okay, so here we see we have some change of character. I'm gonna go ahead and mark that here. Oops, my bad. All right, and then you would measure from the top to the bottom, from left to right. Here's our OTE area. All right, and then we do have a huge fair value gap that is sitting on the OTE. It comes out of it, but that's okay. This one right here. So you can, if your fair value gap comes past your OTE, you can bring it up just to get the area that sits on the OTE. And then as you can see, price retraced up into OTE and then came down. So let's see what that would have been for. That is almost a 10 pip stop loss. And then I would bring it down to the negative 618. That's a 1 to 4. If I wanted a 1 to 3, you would have got that at this negative 0.27 extension. Y'all know I always aim for a minimum 1 to 3. Everything after that is trailed. See, can you code a whole money maker in there? You know, I'm trying. That's a life work right there. Alrighty, so let me see if it came down even further here. It did. So if you would have trailed, you would have gotten that negative 0.618 level, which is almost a 1 to 5. And that is the OTE, everybody. It's not really much to it. So the key elements you just want to take from it is, are you in a premium or a discount when price retraces? So it came up past the 50% level, which is the premium here because we're selling off. Mark your OTE area. Does your fair value gap or your order block, or if you're using supplier demand, is your supplier demand zone in the OTE? And then you want it to be. And then you would wait for price to tap into the OTE, and then you would set your take profit and stop loss levels. And for me, aim for a 1 to 3, and I'll utilize my extension levels here to measure that out. And that is pretty much it, guys. I figured this was going to be kind of short unless y'all had a lot of questions about it, but it's really just that simple. If you don't want to, you don't have to utilize these levels either. If you don't want to use OTE, you don't have to. But what I will say, what you should take away from this is you should at the very least be measuring out the premium and the discount levels. So if you wanted to, you could just do this measurement here and just make sure price comes up above the 50% level before you take a trade. Or if you're in a buy, make sure it comes down below the 50% level at the very, very basic minimum. That key will save you from a lot of heartache. So if you're not going to utilize OTE, at least at the very least, do premium discount. Yes, speak or hold your peace. Speak now, forever hold your peace. Oh, I did say I was going to utilize this on how I utilize this on ticks and pips if you do have the indicator system. So I'm going to turn that on. Okay, we take off replay. Okay. So if you're utilizing the system that we have here, say you got an entry here, this is clearly a buy, this is clearly uptrend. So say we had our 5-minute entry here. I would, whatever swing the signal printed itself within, I would measure out first. Okay, and then same thing. I would wait for price to come back into the OTE area to enter off that buy signal. And that's how I utilize it with the system. So when I do get an entry signal from the 5-minute, I don't enter right away all the time. Sometimes I'll just wait for the swing to finish and then let it dip into my OTE area or below the 50% level and then buy back up or sell back down. Go ahead, Christina.
Hey, I just had a quick question. Like, if you were looking for buys here and above the area where you would normally have the take profit on the fib, like if there's a major supply zone up there, would you still use the fib, or like would you expect it to bounce off of that? I'm just trying to figure out how to use them together.
So if you see like a supply zone somewhere, like you're saying, like somewhere sitting up here. Oh wait, let me measure
Yeah.
a box out. Like I wanted to buy
I've
and
just
I
had it
saw a
come
supply
a lot.
zone. You can't. I mean, you could still buy up into it. It's again, these are one of these things where it's your preference. You know,
Gotcha.
price is going to be attracted to that supply zone. You can still take it up, and then watch for whatever is going to happen. We anticipate a change of character within certain areas that are major like that. It would depending on what time frame your supply zone came from. If it's on the same time frame, sometimes it just may be an area where it just retraces from and then goes back up. But if it's like from the 4-hour, definitely watch what happens when it gets up into that zone. But the fib is just it's like a map. It's not really like a fortune teller. It's just like a map. Like here's where price could possibly go once it bounces off your retracement level.
Awesome. Thank you.
You're welcome. Any other questions, y'all?
Yeah, could you go to GPP and JPY real quick?
Yeah.
Um, a question
Mm-hmm.
like 1 hour time frame.
1 hour.
With the levels, with the levels 184 and like 809 to like 184 310 be like a valid FVG zone on that long wick that's going down right there
You said
for like a sell.
184.09, and then what was your other level?
Well, it's going to be like a little bit different on yours. What basically that long wick that's going the FVG zone that be valid.
I'm trying to figure out which. Are you talking about this one here or?
No, go up a little bit. Yeah, this one right here. Yeah.
This long area here?
Yeah, like right there in the middle. Like, would that be like would that be a valid FVG zone or no?
Yeah, it's
Yeah, yeah.
valid. We
Okay.
do typically aim for the first one. So if this one has multiple FVGs here, so here's the first one, and then this
Oh,
would be the
yeah, I see
second
that.
one. Even though
Okay.
price didn't come all the way up into it, we do aim for the most extreme fair value gap. And that's not to say, like sometimes price will aim for low hanging fruit while it's building structure. So it'll utilize the easiest and closest ones first, but there will be a point in time where price comes all the way back up to this area and take out this
Okay.
FVG. So this is still very prominent. Let me see, did it even retrace into the premium here? Okay, so it did tap a little bit into the premium, but this is not satisfying enough for me. I still want price to come into this FVG here. So, but yes, that is an FVG. Can you slap a foot? Oh, are you talking about this area, Jigga? The one I just did? Okay, I'm with you. We be on the same time. So yes, So yeah, that's another key note to take, guys. If you have like order blocks or fair value gaps that price didn't reach up or down to, still and we realized this, well, not realize this, we saw this play out on London last night. I think it was actually on GBP. I wish I didn't delete my I don't know where all my drawings went. I think I may have opened it up in another tab, but actually let me see something real quick. Okay. I think okay, I'm gonna move this over. Okay, all this was from last night in London. So we were watching this play out, and I think my fair value gap, the first one was, I think it was right here. I think this was the first one. No, it was down here. Sorry. So we had a fair value gap down here. Price started to move, and then it took out, I think I'm getting lost in old price action, but basically what happened was price started to move up. It tapped into an earlier fair value gap somewhere around here. And then we were good. We entered, and then it started to retrace back do a deeper retracement back. And it came back and tapped into the very first one that I had marked off. I wish I would have left it on here. So that just goes to show that your first very fair value gap that you tapped in that didn't get tapped into, still keep it on your chart, because price will come back and hunt it, especially when it's searching for liquidity, it's doing a liquidity hunt. It will come back for that, and then go back up or down. So keep that on your chart just in case. It definitely happens a lot on the lower time frames. So yeah. But yeah, that's pretty much all I got, y'all. That I was like, I don't know how much more I can explain OTE in the fib. Again, the levels that I have on my fib are posted in the resource channel. It's called Two Loves Fib, I believe. So definitely practice this with your entries, or when you're just marking up your chart. Go ahead.
Can you slap the fib on the original move up, starting with the breaking structure? That low and high from the breaking structure.
This one right here?
Yeah, that whole high and low right there. The black.
This right here?
Yeah. So see, that fib was perfectly in the 61.8 level. Price came back there.
Yep.
You see what I'm talking about, love?
Is this the one you're talking about, or?
Yeah, you see how it retraced back into that gap that you said.
Yeah,
that
this
it
one
came
right
back
here.
to first and tapped into the 61.8. It's a perfect example. Another one.
Yeah. So definitely put this into practice, y'all. Or when you go back to mark up your charts or practice charting, and you know our steps, look for break of structure, change of character first, find your fair value gap and order block that was left behind, plot your Fibonacci over the swing low or swing high. If you want, you can highlight your OTE area. OTE is optional. You don't have to do it, just as long as you're still practicing premium or discount zones. And then see what happens. See if price comes into your area and takes off.
So we don't necessarily have to wait for price to come all the way back down and into the fair value gap. As long as it taps into the OTE area, we're fine.
Yeah, if you want to just do OTE, like I would still search for a fair value gap in the OTE though. That's just for me an extra added confluence that makes the area stronger for me. I would prefer for you to find that first. But if you want to just use OTE just in general, in the general sense, like you want to mark out your swing high and then just look for OTE and then wait for price to dip into that area, you can do that too. But I think it is preferred for you to find your order block or fair value gap within the OTE area.
Okay, thank you.
Can you please show the icon for the fib on the chart?
You say that one more time?
Can you please show the icon for the fib on the chart?
Yeah, so I have it on the toolbar and I'll show it on the left side as well. So it is this little, one thing is like four lines right here. And then that is also the third icon down on the vertical toolbar here. And it's, for me, it's the first one in the list. I think some people's lists are different for some odd reason, but for me, it says fib retracement. And then also it gives you the shortcut on your keyboard, which is Alt and F together, to start plotting that as well.
Thank you.
You're welcome. Oops, let me take this off. Any other questions? So I really like this tool. It really helps. Oh, I'm sorry. Did I interrupt somebody?
No, you good.
Okay. So yeah, for me, it helps with risk management. It helps with stop loss. It helps me determine where my take profit's going to be. It helps me find an accurate, very, very good point of interest area for retracement. So for me, I utilize the tool a lot when I'm watching price action on the chart. So yeah, guys, I think y'all will love it once you put it into practice. This is also for me the easiest way that I've ever used the Fibonacci. I've learned the Fibonacci tool multiple different ways. I've learned about golden zones and, you know, other types of extensions, and all that was great, but the OTE area was the best way for me I've ever utilized the Fibonacci tool. If there's not any other questions, I'm going to end the Zoom soon. Thank you. You're welcome. No problem. I hope this
I wanted
helps.
to say something.
Oh yeah, go ahead.
So when y'all do this homework that she said y'all want to go try, don't stop sending it after you do like 3. Right. Spam us with homework so we can make sure you're good. Because some of y'all just do it a couple times and then that's it.
Yes.
So
Start time
any
is
homework, just do it as much as you can and show us.
I agree. It helps us gauge your learning curve where y'all are sitting at. So we anticipate y'all to get better and better with every chart that you mark up. So please make it a point. I know, and this is gonna be just a little snippet, okay, of I don't know if you want to call it morality boost or whatever, but you guys, I know that y'all have busy lives. I understand, but this skill that y'all are trying to learn is a life-changing skill. So y'all can't be weak sauce when it comes to this. Y'all have to really sacrifice some time. It takes sacrifice to do life-changing things. So if y'all are going to just, you know, tiptoe around certain things, you're not going to be successful at this. Y'all are going to have to go hard. It's go hard or go home when it comes to learning how to trade the financial markets. If not, it's going to wipe the floor with you and take all your little monies. So y'all have to go hard when it comes to this skill. Y'all have to put in the time. Yeah, like I said, I recommend a chart every day. You should be watching price action. You should be looking at a chart. You should be marking up, even if you think it's wrong. Even if you feel like you're placing it in the wrong place, still do it. Because if you don't make any mistakes while you're not putting your real money in the market, you're not going to learn. Y'all should be demo trading. You should be attending lives, even if you don't have a funded or a live account. You should be still demoing whatever you see. You should be getting logistics down of whatever apps you're using. All this stuff is going to matter. All is going to come together and is going to play a part. And if you are fumbling at any point of this process, you're going to lose money because of it. Is a guarantee. And we've all, like, all the mentors have been there where we've entered the wrong trade, the wrong way, the wrong lot, too much lot, double trade. Like, we've made those mistakes, which have costed us money, and we don't want that for you guys. So please do the homework. And even if it's no homework to do, just mark up a chart and say, hey, is this right? Did I do this? What do you think about this? So, right. So please, guys, I'm telling you, even in the sessions, the Zoom sessions that we have, it's very quiet. For me, on my sessions, it's quiet at least. Only if very few of y'all speak up. And I know some of y'all have stuff going on in the background, but I like for these Zoom sessions to be interactive. So if you're shy, and when you're in the Zooms, you need to get rid of that, because the market's not shy. Is you can't be shy with the market. So y'all gonna have to get some of them vices out the way, and and no more complaining about I want to quit. I don't want to hear I want to quit no more from any of you guys. I don't want to hear I want to quit. I know it's hard, but y'all are in the best time right now to learn how to trade. Y'all have so many different tools, mentors, discords, funded prop firms at y'all disposal that I didn't have years ago. So you're in the best time right now to learn how to trade. So no more complaining. Okay, slap yourself in the face if you need to, and say, I need to change my mindset. I'm gonna conquer this. I'm gonna master trading. That's the type of mindset I need to hear from you guys. So with that being said, is there anything y'all guys want to add to this webinar? Or I love you all. I promise I do. I just wanted to give you a little bit of tough love, because you can't say it. You can't be a quitter with this. It's just not gonna happen. If you feel like you're gonna quit, you're gonna quit eventually. If you feel like you're gonna fail, you're gonna fail, because the market is set up for you too. All right. It's any time frame. You can mark an FVG on any time frame. For me, I use FVG on my entry time frames. I also utilize them on the 4-hour. If I find one on the 4-hour, I'll wait for price to come into it, and then I go down to the lower time frame and wait for a change of character within that zone to get in for a trade. But yes, you can utilize. I mean, I don't want to say there's really a best time frame. It's just, if you're using it to enter, use it on your time frame that you use for entries. No problem. Does it have to match up with other time frames? Not necessarily, if I'm thinking of it in the way that you're asking. If you're bullish on the 4-hour, but you're currently, the 5-minute or the 15-minute is currently bearish, you're going to get bearish fair value gaps and order blocks on that time frame until it reaches the prominent zone on the 4-hour. So at some point, it's not going to match up until price gets into that point of interest on your 4-hour, and then does a change of character, and then you're going to have the fair value gap that aligns with the bullish move, if that makes sense. So, like, let me see if I can show this. Actually, I think I'm a visual learner, so let's see. Something without a news area. Right here. Hopefully I can replay from here. Actually, I'll just do this. Okay, so here's a fair value gap. It kind of dipped below it because there's one right below it too here. But I'm actually just gonna expand this all the way down. Okay, so it came into this area on the 4-hour. So on the 15-minute, this is a bearish move. So it's leaving bearish fair value gaps behind, I'm sure. So if we go down to the 15-minute, all of these, if you were gonna trade, which would be a counter trend trade from the 4-hour trend, it's leaving behind fair value gaps that are bearish, that you could have utilized until it got into your 4-hour point of interest zone, which is this fair value gap area here. And then you will start looking for fair value gaps that are bullish on the way back up. So this is when it would align, but that doesn't necessarily mean that the opposite fair value gaps that you were getting on the way down weren't valid, because they're still very valid. As you can see, you probably would have got, like, if you entered off of a few of these entries, like this is over 200, almost over 300 pips here coming down into this zone. So just because they're opposite on the lower time frame doesn't mean that they're not valid. Did that answer your question, or did that make sense? No problem. Any other questions, y'all?
So basically, you said that you mark the fair value gap on the 4-hour time frame, and then you try to see if the 15 minutes also matches, if there's a fair value gap in the 15 minutes.
I'll mark it on the 4-hour because it's an area of interest and price is going to come to it eventually. So like if I found this 4-hour fair value gap here on this chart during this bullish run, I would mark that area and say, okay, well, here's a fair value gap here. During some point of the retracement in this bullish run, I would want price to come into this fair value gap. Let me even see, like you can also utilize the OTE, which we've just learned. So it's sitting right like on the beginning of the OTE area. Our OTE zone is right here. So this would be like an area of interest for me on the 4-hour. And then that's when I would drop down to my lower time frames, which I use for entry. So I will start with the 15-minute. And then, of course, I'm waiting for a retracement. So I know there's going to be a huge downtrend to get to that zone on my 15-minute. So I would, if I saw it at this pivotal point here on the 4-hour, I'll be waiting for a change of character up here somewhere to signal that that downtrend is about to happen. And then you have areas of entry here, here. Like you could have gotten it multiple times and utilized fair value gaps on the way down. And then once I'm in this zone, now like I'm looking for change of character and fair value gaps, bullish fair value gaps to utilize on the way back up. So I'll be looking for it to come on out. Change of character, bounce off a fair value gap and keep going. So there would have been a fair value gap or something here, took the trade and then continued up for the rest of the uptrend on the 4-hour. So if 4-hour is your higher time frame zone, for me it is. I rarely use the daily anymore. If I find a fair value gap or order block on the 4-hour, those are areas of interest for me to wait for price to come into, for me to utilize now on the lower time frame and look for a change of character for the continuation. I do counter trend trade against the 4-hour trend. So this whole bearish run is a counter trend move because the 4-hour is bullish. So it's up to you if you just want to wait. We don't recommend counter trend until you're experienced, but again, this was a very huge bearish move on the 15-minute. So if you trade lower time frames, you probably would have gotten in on this anyway. Did I answer your question, or did that make sense?
Yes.
Okay, cool. All right. Anything else, y'all? These are really good questions, by the way. And I'm assuming y'all understand how to use fib. Again, if you need to learn how to plot it, it's from the bottom. If you're doing a swing high, from the bottom to the top, from left to right. And if you're doing a sell, from the top to the bottom, from left to right. Your retracement should be coming up in levels. So if it's backwards, then you have plotted it wrong. So as your retracement is happening, it should be like 0.5, 0.6, 0.7. Same thing if it's coming down, 0.5, 0.6, 0.7. If the numbers or the percentages are not increasing, you have plotted it wrong. So be sure to look out for that. All right, anything else before I let you guys go?
So if you don't recommend counter trading, where would you recommend for beginners to enter?
So if you're gonna continue with the trend, which we recommend for newbies, is to wait for it to get to your area of interest on your higher time frame. This could be on the hourly too. It doesn't have to be on the 4 hour. You can wait for your fair value gap or order block to be entered on the hourly if you like, and then wait for a change of character inside or coming out of that zone. And then you would get the huger move. So this move would be, it's larger than the retracement move. So that's what we would recommend.
Then would you put your take profit at the previous higher high?
Yeah. For example, if you were waiting for price to come down into this 4 hour zone to get in for the 4 hour buy, then yeah, you can aim for the 4 hour high here. So wherever you found your change of character and your entry at, we'll just say here, for example, so price came down to this area, and then your stop loss, it would not be 60 pips, it would be something smaller. But and then you would aim for, you can take multiple, this is a 4 hour high. So you could have taken profit at different levels here. So I'm pretty sure it'll be smaller on the 5 minute, but these previous levels, I know people ask about, what about the price action to your left? The previous highs or lows in the previous trend to your left are areas of take profit, guys. So you can do that too. So you can trail it up or move your stop loss into profit. This would have been more of a swing trade though. This is the 15-minute. So I know some of y'all don't like to swing trade or hold that long. But for me, I don't mind swing trading or intraday trading. So for me, this is fine. You can go down to the, like I said, if the stop loss is too large, you could go down to the 5 minute, and then the 5 minute would have been more of an intraday trade. Yes, Jig, I tell you, we're on the same wavelength. So yes, that would be areas to take profit. You want to aim, if you're entering off of a 4 hour point of interest, aim for the last high in an uptrend or the last low in a downtrend. And then also know that if you're coming out of a 4 hour zone, you're going to have previous areas of structure that it created on the way down or up that you can use as take profit levels. Does that make sense?
Yes.
Okay, good. Okay, cool. Anything else, y'all? And again, the market is fractal, so this happens on every time frame. You just have to figure out what pair of time frames you like to use. Some people will go, I like the 1 hour higher time frame, and I'll enter on the 1 minute or 5 minute. Some people use a 2 hour time frame as their higher time frame. Some people use the 4 hour. Just know the higher your time frame goes, a little higher your entry time frame might be, which means the longer you might have to hold your trade. So if you want to hold your trade for a shorter amount of time, I wouldn't go no higher than the hourly, and then enter off the 5 minute or the 1 minute, so you can get in and out your trades faster. But if you're entering off of a 4 hour zone, you can hold your trade for a long time because you are entering at a very like high or low point of a very long trend. Hey, do not call it that. You might offend somebody. Do not call it that. I don't know. You might take a survey on that name. But yeah, guys. So any other questions while y'all have me here? Y'all are doing really great, by the way. I love questions. That lets me know that y'all are engaged and that y'all are processing the information.
I think what trips me up sometimes is seeing the red, even though it might go up later and stuff, but like just when it's going down in the moment and tries to retrace back,
Yes.
it's just like you feel like just leaving the trade right there and then.
Yeah, we had a special person last night who took their profits early because it was moving up and down. They couldn't hold. I'm not gonna say no names. But yes, holding is a mental battle, y'all. And I promise you, as you watch, like just watch price sometime. Like even like if you're up during London, if I'm live, just come watch me trade. I try to explain price action as I'm marking up my chart, try to explain to you what price is doing, why it's doing what it's doing, so that you can get more comfortable with the strides that price makes as you're in a trade. Because yes, it will test you. It will retrace back down to your entry. It will try to make you scared. It is an emotional battle, and the market is drawn off of emotion as well. So I always say, don't be scared. That's why I just got to a point in my trading journey where I was like, look, either it's going to stop me out and take my little money off the table, or I'm going to hold and it's going to take me to TP. You will get to that point, I promise. Do not let the market scare you, but also make sure that you're comfortable with your risk. That also plays a part into your mental tenacity with staying in your trade. So if you need to risk 0.25% or 0.5% to make yourself more comfortable with holding that trade, because you know it's not going to take as much money from you when you lose, do that. That way you can get more comfortable with holding. I promise you, holding is beneficial. If you cannot hold, then learn how to trail. I always recommend trailing on the lower time frame. So if I entered off the 5, I'll go to the 1 minute. And again, the market is fractal. So it's going to give you, like, if I'm in a buy on the 1 minute, I should still be getting higher highs and higher lows. And I will just move up my stop loss to the lowest higher low. So like here, if I was in a buy, like we'll pretend this is the 1 minute, I'm in my trade and I entered somewhere down here, then once like it makes this higher low and breaks this high here, it shouldn't come back. So now I'm placing my stop loss into profit right here. Oh. Why is it doing that? I swear I hate the paintbrush. Okay, there we go. So like this line here is my stop loss. So I'm moving it below this low, and then it broke this high, retraced on the 1 minute, created this higher low, and then moved past the high. Now I'm comfortable with moving it right here. And then so forth until it takes you out into profit. So that's also a way that can help you hold your trade. So yeah. Stop letting the market show you a hoe. In the famous words of Jigga. So yes, you can utilize those methods as well to help you hold. I don't win every trade. I get my stop loss hit sometimes. Sometimes I get taken out earlier than I want to, and then it goes back in my direction. It will happen. It's the market. It's gonna do it. But just know that if you do get those few trades in between that hit your 1 to 3 or higher, and that makes up so much more for it. You only need to win 30% of your trades, guys, if you're doing a minimum 1 to 3. That's accounting the losses that you hit. So if you mix in your break evens, that's even better. So, but yeah, just practice holding on a demo as well. You guys will, I have no doubt you will get there. So yeah.
Is Sunday the next time that you're going to be trading?
Yeah, we're all hands on deck. Well, I'm not going to be on Sunday. My live trading days are Tuesdays and Thursdays for London. And then I don't know Jigga and Mario's schedule, but they're usually New York.
Bro, don't ever trade on Sunday.
Yeah, it's not recommended. It's not recommended, but
bro, 5 years, I never won a Sunday in my life.
Yeah.
So yeah, London Monday is not bad though. I mean, a lot of people say I ain't trading none, but London Monday is
Monday's
cool.
straight. It's cool. It's okay.
Yeah. But yeah, that's my live trading schedule here. Sometimes y'all get lucky and I will hop in one of their lives and then end up live trading like I did the other night. I was supposed to be taking a break, but TraderZ life for me. So so if I do hop in a VC or live with the other mentors, most of the time I'm gonna end up sharing a chart or helping out somewhere somehow. That's just my nature. But yeah, that is the solid schedule that I have here.
For me, man, if y'all see me on the Asian, I'm gonna try Asian session next week. So
Asian
y'all
has
see
been
me
on
post
some
on at like
new
8, 9 o'clock at night, bro. Just come on in.
Yes, Asian session has been like it used to be known for ranging, but as of late, it has been trending in Asian. I don't know why, especially the first 2 hours. I don't understand what's going on, but yes, you can definitely get some moves out of Asian as of recent. But yeah. Any other questions? Preguntas?
What does that mean?
Questions?
I knew that. I was just trying to see if you knew.
Just one more. What's your prediction on this? Do you think it's going to keep going up, or it's going to reverse?
On what I have here now?
Yeah.
This is actually a really good chart markup. I might be looking for a good change of character when week opens and be bullish on GJ. So yeah, guys. This was a kind of an analysis too. So it did come into a 4-hour fair value gap, and it's coming out. So I think right here it actually did a change of character right here in this little area. So yeah, and as you see, this trade is actually in profit already. But yeah, I will be bullish looking for this upcoming week on GJ. So just a little, I'll actually keep this on here and look, see what happens on Monday London. Patience, your session is NY. I love NY. I be tired. I've been trying to make NY more often though, but I do love New York session. It is way better for me because I like to go with the trend. And London, I've struggled with London for a long time because London likes to do the opposite of the trend because it's trying to create the higher low of the day. So I've been trying to master that for London specifically. But in why we locked in like when it comes to trend. I feel you. London is, oh man, is a late session. So I don't even blame you. People fall asleep on me during the live session, and I'd be like, "Look, I understand.
Right.
Bring your pillow."
I missed the damn. I missed the GU move that happened Tuesday that formed the high of the week.
Oh yeah, I heard
I
you
was
mention
up.
it to Mario. Yeah.
I was up like soon as London opened, I'm up, bro. Like the last 15 minutes before it happened, I fell asleep.
Damn. That was a good move too. So yeah, y'all
Oh
been
my
killing it
God.
on the high and low of the week. Like that is major. And I know Mario did one on NZD USD, which was a good trade. Like that was like a beautiful trade when it came to power of 3. So yeah, they're killing power of 3 right now. So
Thank you.
mm-hmm.
It's nothing compared to your fancy dancy indicator, but you know.
It's a little something light. It's you know, my next project now is just the Judas swing for London. So y'all know I've been
I
working
seen
on that
somebody make an
heavy.
indicator for that, and bro,
Really?
killing that shit. Yes.
Oh, I'm about to find that. I mean, I want to master it manually first, of course.
Obviously, yeah, like we could do it, bro. We could do it ourselves.
Yeah.
But I'm just like, who?
Yes. So, I think the one we did for GJ went all the way to my take profit area, I think. I really wish I didn't take off all that markup. Oh wait. Let's take it off. Gosh darn it, I did. Oh no, it's over here. Almost. I had said this was the first area it might reverse at, which it kind of did, but then it kind of moved past it a little bit more after the session. But yeah, it was a good move, a very good move. So Judas is where it's at for the term Judas. You know, that's an ironic statement because the Judas is to deceive or to confuse. So when you said it confuses you, it's doing its job apparently. But
Yeah,
yes.
no, it's misleading as fuck.
But yes. But yeah. Anything else? Anything you want to go over, Jika, while we're here?
So now that you're here, I want to ask you live in the flesh. Did Mario help you call this out, or is he lying?
On G. So okay, so let me try to think how this happened. All right, so I came in the live and Mario was in sales at first. I forgot what point he sold off at. And then I came in and the sale was out. They had took profit on the sale. They got out their trade. They were good. And then I came in, I was like, okay, I think the Judas is starting to form. I said this like right here at this little doji right here. I said, oh, the Judas is about to form. And then I saw it push up past the midnight open. I was like, okay, y'all, I'm finna like, call out the buys for the Judas, which I did. And as you can see, this little area happened, and that took some people out, scared some people. Some people took their profits when it came back up. And then after that, people went to bed. And then right here in this area, T, she held, and I told her to trail her profits after it got late, and she held her profits, trailed it as far as she could. So it was like both of us. It was both of us.
No, it was you. I don't know. You got scared on the higher time frame. All they did was form a double bottom.
On the higher time frame.
I mean, what we looking at now, like people got out, it's like it formed a double bottom inside of the gap. That's extra confluence even
Yeah.
in.
So yeah. But
Yeah, he
I
still
give
was
him
like,
credit because I wasn't looking at GJ at all. Like I wouldn't have seen that if he wouldn't have been on GJ. So
I guess.
give that man his credit. So no, he did give profits on the sales, and then I mentioned the Judas on the buy. So yeah. We have witnesses there. I'm not the only witness. So yeah, guys. But yes, that was a nice session. Alrighty. Anything else, y'all? I know I be sounding like a broken record when I say that. I just want to make sure y'all are good. I really want to make sure there's no one left behind. Like, don't be afraid to tell me you don't understand something. Just tell me I just don't get it. Whatever it is, I will break it down like it's never been broken down before if I need to. All right. No other questions, y'all. So I'm finna go ahead and end this session off. I will upload the recording tonight. Again, the settings are in the Discord under the resources. Go ahead and set up your fib and start putting that to practice. You're very welcome. No problem. I know I love helping. So I hope this helps you guys in your journey and it's instrumental in your entries. If you start practicing and you have any other questions, as I always say, please add us in the Discord. And yeah, that is it. So y'all have a great night.
Thank you, you too.
Thank you.